Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. Our telephone number, if you want to write it down, is 888-713-2929. Write down the number. Ask your questions later when we're off air. Reason is that probably some of the stuff that we say during the show are going to answer some of the questions you might have. If you do have complicated or particular specific questions about your loan or your potential loan or your real estate situation, I can give it way more attention if you do it offline. But the phone number for you to write down, make it easy on yourself, 888-713-2929. We do have an email address, info@malibufunding.net. Malibu Funding, company that sponsors the show and employs me, so I appreciate their efforts, and that's why that email address is what it is. Now, we do have more, extensive or different emails, but that one's easy because Malibu Funding at Yahoo has been an email I've used for that company for 15, 20 years. So if you're out there and you're looking to get involved with the show, please do. We would love to hear what you have to say about what only the content is, but your questions about the real estate. There's a lot of things happening in the real estate market. There are a lot of things happening in the mortgage market. The general and overall economy, the world events changing. Oh, by the way, did you see the bombing out there in Saudi Arabia, those oil fields?
Wow, yeah, that was incredible.
Incredible, right?
Incredible.
Yeah,
I thought the Saudis were our friends up until just recently.
Well, the Saudi government is a very repressive and brutal government. As you know, the Crown Prince murdered that guy, journalist. When was it? Last year?
Yeah.
So, yeah, there are friends in as much as the oil is something that we need, and we need it cheap and as much as we can get when we want it, right? Isn't that the deal with the Saudis?
Absolutely. It is all about oil.
Yeah, after 9/11, I hate to digress, but I have to. The Saudis were given the only people who were allowed to fly after all the planes were grounded was the Saudi royal family, which extends, of course, to thousands of people. I mean, how many crown princes are there? 100?
A bunch.
A bunch, right. So they were allowed under then President Bush to leave the country and get on a plane and fly. So this bizarre, or I don't even know what it's called, but I'm sure it's all related to oil, which in fact, the reason I bring it up, did it affect the mortgage interest rates? And most people we awoke to this fact of a very, obviously if you were in the neighborhood, i.e. in the Middle East, and you lived in one of these countries, this is huge news. This is like going to war news. Here, not so much. Nobody even really paid attention to it.
People say war. The Talking Heads have a song called Life During Wartime, where you're talking about shotgun shacks and running through the streets and hiding. A lot of people in this country go, let's go to war. But the war's not on our block.
Never.
Right? It's not in our city.
No.
It's nowhere around us. We're not hiding in bunkers in our homes, right? Until you actually are on the streets where it's taking place, right? It's one of those illusionary things that you can't see or taste or feel. And it's really easy to say, let's go do this if it doesn't affect you personally.
Well, that's the exact point to all of this. It doesn't affect us personally.
Well, with deaths in our family and soldiers going in, family dying,
if you have relative, absolutely. We have a relative. My niece's husband is currently deployed in Afghanistan, his 4th deployment. I think this is his last one.
But, we don't have to look both ways before leaving our house.
Right, never. And if it doesn't affect you, as I said, we have some family there, but as a rule, is the mortgage market affected by this? Absolutely not. No, if it goes up 20, 30 basis points, it really doesn't matter, which is a quarter point, by the way. So instead of getting a 3.5% mortgage, this week it's 3.75%. Does it really affect your payment long term? Probably not. And you're still pretty excited to get that mortgage. And the thing of it is, which is, I guess it's part of the age we live in, right? It's not just presidential politics. It's the fact that the smartphone is in your hand. It's the fact that we're insulated in our world so much that only events that affect us, as we said personally, are going to make us and our decisions and our behavior change. Otherwise, it's not going to change. I.e., do we really want to go to war? No. But do we want to get out of Afghanistan if the Taliban's going to take over? Now, why does this even matter? What do I care about the Taliban and what's going on in Afghanistan? Seriously, I shouldn't. But because we're removed from all of it, we're made to have an opinion about something that really doesn't affect us, and it becomes intellectual garbage that just is in and out, and everybody has an opinion, when really there is no opinion other than, let's save my nephew, let's save the people who are there, but it just, get them home.
Yeah, you become a war agnostic after a while.
Right, exactly right, which is, again, the political will of what's happening in the country, whether you're pro or against the current president, whether you're pro or against the current Congress. The fact is that it is so much noise all the time that you either shut it off or you become one of these Facebook, I don't know what you even call them. They're just so militant on one side or the other that you can't really get through to them. Perfect example, the deficit. Now, I've been talking about the deficit, as many people have, for years. This year's budget deficit for the U.S. is $1 trillion. Think about this for a second, $1 trillion. $1 million gets you what? 3 feet off the ground if you pile the bills on top of each other.
Right.
$1 billion
moon
gets you to the moon. $1 trillion, like Jupiter. I mean, it's just ridiculous the amount of money that is. Yet, this is borrowed money. So I'm trying to convince both right and left viewers that this is the issue to take care of, because we're not talking about something that is a left-leaning issue or a right-leaning issue. All administrations do it. They all borrow money from our children and grandchildren to pay for stuff today. And so what are we paying for today? Are we paying for cheaper housing? No, housing costs go up all the time. So what we end up doing is artificially lowering the interest rates. I just said it. Let me look at the rates here for a second.
That's the quantitative easing.
Yes, exactly. All of these things in order to be able to keep things cheap for now. But what is this bode for your kids or your kids' kids? This guy Yang, do you know who Yang is, Andrew Yang?
Is he the one running that started the lottery thing?
He's the guy that says that every American should get $1,000 a month.
Right.
Every month.
And he was going to start off by giving
his own money to some people
like
who
10
he would
families
put in a lottery in order to highlight the fact. The reason he does that, and this is the scary part of all of this, and why it affects you and your mortgage today, or why it will affect you and your mortgage tomorrow, is that the bill is going to come due. And because the employment in the United States is going to be drastically reduced when artificial intelligence, robots, when flying vehicles, and don't think this is somehow a Jetsons, and for those of you who don't know who the Jetsons are, it's a cartoon where they would fly around in space, and that's how things worked. All automated, robots, things like that. This is what's happening now. My particular job in the mortgage industry is going to be replaced by an automated service with which the only thing you have to do is plug in your information and get rejected or accepted. You may talk to a loan officer once, maybe twice, but that's it. But all of this automation is coming in every industry. And what's going to happen to pay this debt when it's due, when 55, and that's what Yang said, 55 million people are going to be out of work at maybe not this decade's end, but the next decade's end. And you couple that with the largest section of the population going into retirement or into their really elderly age, i.e. the baby boomers, we've got some serious problems. So as a result, The cheap mortgages that you get today are really on borrowed time, and I've spent a great deal of time trying to educate people that we need to get the budget under control so that we don't have to borrow against our children's future in order to pay for my cheap mortgage today. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thank you for the time. Thanks for listening. Thanks for tuning in each and every week, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number. If you write down the number, have questions during the hour on the show, give me a call. Ask me. Leave a voicemail. We'll get right back to you. There's a lot of complications in the loans, in the loan business, the things you may want, questions about the type of employment you have, the type of FICO score you have. All of these things I can answer off air. Reason being is that usually it's a longer conversation than a 3-minute on-air conversation is going to get. So anyway, give me a call, email me, info@malibufunding.net, and any of the guests that you see or hear on the show, you can see on YouTube. If you go to YouTube, my YouTube channel is Jeff Barton, the Mortgage Voice, and today's guests you can see there. They're much more interesting than me, and our first one being Brian Wall from Malibu Funding. Brian, how are you?
I'm doing great. How are you, Jeff?
You know, I'm okay. The business is, it changes. I mean, we've had interest rates go way down, and then they came back, and so I'm not really sure where they are today, but it's somewhat of a challenge because what happens is the borrowers I talk to get used to something in their head that they heard maybe it was good a couple weeks ago, and then you have to kind of redress their expectations. How are you finding that?
Yeah, I find that to be true. It's a big education for most people because they get a little soundbite on TV, or perhaps it is from a radio station, and they need to really consult their mortgage loan officer or their broker to get their specific questions answered based on their circumstances. And so the more time I'm able to spend with the individual, the easier it is to kind of explain the process and understand that there's a time period that you have to get all your documentation in, and then what I describe as them being on deck. They're in a position to strike if the rates are favorable and it works for them, or we can have a discussion of whether or not at that moment is the best for them as well.
That's a good point. The idea that you need an interest rate at a certain rate in order to afford the property. Is that a problem about rate, or is that a problem about lack of supply of housing?
Well, I think it's a combination of both. I think folks are talking to their neighbors, and everyone is chasing the rate, and that's tied to the affordability of properties. The rates tend to go down. Sometimes the properties in certain areas will go up, and then you're still paying the same amount of money. But at the end of the day, the property needs to be affordable for the individual person and within the federal lending guidelines. So I've always expressed to my clients that, we can keep chasing the rate all day long, but you may miss an opportunity. So if it makes sense to you today, I would take advantage of what it is today, because we don't know what tomorrow is. If we did, we'd all be on a beach with umbrellas in our drink somewhere. But that
is absolutely true. Tell the audience where you do a lot of your business so that they get a feel for the type of loan officer and where it is exactly that you're doing your loans.
Well, what I call my day job is I'm a firefighter for the Los Angeles Fire Department. I got into the business because I wanted to provide a transparent and honest education to my coworkers, and so that they could make a final decision without feeling like there was any pressure for me on my part to try to look at them as a meal ticket.
Right.
I make a very good living as I make a comfortable living. Let's say I work a lot of overtime, but what I really wanted to do is have an honest dialogue with my clients, and so that they know at the end of the day, what I'm telling them is truthful and honest. Not to say that those out there don't. It's just that everybody has a different motivation in the business, and so my goal is for them to be happy at the end of the day. So sometimes it makes sense to them. Sometimes they elect to go to other places. I welcome I welcome them. I actually asked them to go look at other lenders and other folks that they can compare. And at the end of the day, I'm there for them. I'm their advocate to get the best deal possible. And part of it is, again, the education on execution. So we could all promise the world. It's really that comes down to the end. What team is involved to execute what they're promising?
Yep. No, I agree with that. What you just said, and obviously because of now I know your main profession and what you do. Thank you for bringing that up. I didn't want to bring it up just simply because I wanted, people to get a feel for you as a professional. And now that you throw the fact that you also save lives, help people, try to get them, to whereby they're safe in a situation, regardless of the situation. And I'm sure you're involved in many types of different situations, not only fire, but car accidents and all kinds of things that would, upset a lot of apple carts in my life if something happened to my children or my wife or my house or my family. Knowing that someone like yourself is out there really is a great thing for me, and seeing that you provide that kind of service for the people at where you work every day. That's the type of company that I like to work for, and those are the type of people that I think make great loan officers. And the fact that you bring that service to them, that's a great thing, Brian. I really appreciate that.
Yeah, you're welcome, Jeff. I got into my profession quite some time ago, and I'm very fortunate to be part of the fire service and fire family, and we pride ourselves on that honesty and allowing us to come into your home during your worst day,
right,
with the goal of making it better for you. And so, again, that translates into many other things that I do. I do have to have a disclaimer, though, that the fire department is separate. They do know that I have outside employment, which is required for me to notify them. They've authorized it, but certainly, what I do isn't an exact extension from them. It's not their opinions. They're of my own, and so just need to be able to say that as well.
No, that's fine, and I understand that too. I mean, in our business, in the loan business, in the real estate business, the disclosures of, what you do and how you do it and how it may or may not be a conflict. Yeah, we're all well aware of that in our litigious society and the way everyone takes something the wrong way, especially given the fact that online and on Facebook or any of these social media sites, you say one thing that's really different from somebody else's opinion and you get attacked by 50 people. So no problem with that at all. Are you still there?
Yes, I'm still here.
Oh, okay, great. So when you work with your clients, what are some of the issues that you're challenged with in terms of trying to solve for the people who you're doing loans for?
So one, like I said, just having them understand the process and what's required. And so each loan is unique. We all have challenges and hurdles, some more than others. And so we like to identify those early on in the process. So upfront disclosure of, everything that you're involved in, whether it's your house is under construction or you've had some derogatory mark on your credit report. Most of all that is overcome if we know early enough, and we can have some honest discussions and, again, dialogue regarding what options are available for that particular instance. And so you got to walk through the process. It's new for most people.
Yep.
And so I really like to take them through that journey and have them understand why we're asking for what we're asking for,
right,
and what the overall goal is and what their goals are or intentions. And I'll give you an example. So FHA changed some of their parameters. So now you have what's called the MIP, Mortgage Insurance Premium, analogous to PMI, which most people know, but it's the government's private mortgage insurance. It's MIP. And
okay.
so they made this change and they lowered that rate, and so it allowed people to qualify for a refinance. But they didn't realize that with the new MIP, it would be for the lifetime of the loan. I mean, there was a circumstance if you put 20% down,
Right.
that it would be different. But they were in the old provisions of MIP and the loan to value criteria. So they could have been, that could have basically dropped off their loan within a year or 2 years. They were chasing this lower payment for a couple $100, where it cost them a lot of money if they moved into that new MIP program. And so I could have funded quite a few loans and made a lot of money, but I explained the circumstances to
Right.
them. It made sense to them to hold on and just wait it out for a couple years, and then it would drop off, and they'd have a considerable savings over the other 20-plus years of their loan.
That makes a great deal of sense. We're up against a time frame here. I appreciate you coming on the show, sharing with us what you do and how you help, both in your day job as a firefighter and certainly as a loan officer for Malibu Funding. Thanks, Brian, for coming on the air.
Absolutely. Thank you, Jeff.
Okay, and that's Brian Wall. He's a loan officer for Malibu Funding. I'm Jeff Barton, your host for The Mortgage Voice, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number. Write down the phone number. Have questions. Call us later, and we will get back to you with a more detailed and explanative way that we can try to help you. I don't know if explanative is a word.
I just wrote it down.
Exactly. Look it up.
I'll add it later.
Exactly. So all of these ways to get in touch with us, info@malibufunding.net. We have YouTube. We certainly have a Twitter account. I've got a blog, all kinds of different ways. But the main thing here is to try to provide you with some information about what's going on locally and what's going on in the different places that the company that sponsors the show, Malibu Funding, has offices. And again, we revisit Las Vegas, Nevada today with Rebecca Fitzgerald, real estate agent for the realty firm. And want to bring her back to the show once again. Rebecca, how are you?
I'm doing okay. How are you, Jeff?
I'm okay, thank you. I mean, I guess the weather's like scorching here, so I never like to show properties when it's hot. I'm sure it's very similar to there in the valley. So when it does get excruciatingly hot, what do you do to mitigate those things for your client, or do you just go at a later time of the day?
Yeah, I usually just try to work around it. I have kind of like a rule of thumb where I really try to show the least amount of properties to each client, kind of really like hone in on exactly what they like. Like if you're showing people 10, 20 houses, like it becomes like overwhelming and they'll never choose something.
Right.
So kind of that aspect. And plus, most houses have AC when you go into them, so you're really just outside. I showed a half property a couple of weeks ago, and the hardest part is just getting into the lockbox. And once you're inside, you're inside.
Right. Okay. You mentioned doing it like a pre-interview or really trying to hone in on what they want. What are some of the questions that you ask so that I can know exactly, what the process is for you?
You're basically just trying to figure out how many square feet and like what style of a house that people are interested in. If they want to have an HOA, just different qualifiers to knock things off the list.
Okay. What is going on out there in Vegas market right now, and how are we poised for the fall and going into election year?
I particularly think that it's not flying off the shelves like they were like a year ago.
I see.
We still have a very healthy market. We still most housing. It's like 6 months is the staple of a healthy market. I think we're around 3 or 4 months of listing a home and it's selling.
I see, and that really speaks to, I guess, the influx of people, or is that homegrown? I mean, Vegas is now, 2.5 million people?
Yeah, there's just a lot of people, I guess, that are moving from California. It's just becoming more and more people are coming out here from California. Like, as you know, we had an election last year, and
Right.
the governor is now a Democrat, which is the influx of people from California is represented in that.
Oh, you think that is it the fact that Democrats really rule the cities and the Republicans rule the rural areas, and because Vegas is now so big, that's why? I hadn't thought of that.
I wouldn't really put it that way, but I mean, I guess.
Yeah, I mean, in the political spectrum, okay, well, housing, building a housing, are they building a ton out there, or is it slowed down as well?
They are still building some. There's some going on, like out by Henderson and stuff like that. I've noticed.
Mm-hmm.
And they're building a lot of apartments, actually. Things like rentals. We're actually short in the rental market, so things like that are getting built out here.
Now, the rental market. Yeah, go on. I'm sorry.
Our stadium is going to be done before the one in LA.
Yeah,
so
what's
they put stuff up really quickly out here?
So it's 2020. The Raiders are going to play out there next year.
Yeah.
Wow, that is fast.
They already named it the Allegiant Stadium, and they already have the glass going up. I haven't seen any progress with the one in LA.
Now, I flew into Vegas, as I told you yesterday when I talked to you. Last week, we flew in to see Bruno Mars.
Right.
The stadium really looks far along. I mean, it really does.
Yes, it really does. It's right on the street from me.
Yeah, it's really impressive in terms of, like you say, the speed by which this is going up. And I think, just based on the people I talk to when I go out there, people are really excited about the Raiders coming to town. And I think that will really bode well for filling that stadium with everybody on the Strip. I think that's what's going to happen. Whoever is there is just going to go to the game.
Yeah, there's been a lot of people, like, in the building I live in, which is right down the street from there, that have been buying in this building and in the area around it.
Because of the proximity to the stadium?
I think so, yeah.
I see. Very good. Is it raising prices? Give me an idea of, do you think the football and the hockey teams are causing more demand and therefore the price is going up, or do you think it's just not that big a deal in terms of pricing?
Well, I think the majority of it hit whenever they initially announced that the Raiders were coming here. I don't think the hockey team really affected the market as much because most of that was just like they just grew a fan base here locally. But yeah, the prices did go up when they first announced the Raiders were going to be coming out here. That's just, like I said, it's kind of like leveled out at this point. It's still, even though that's gone up a lot in pricing, it's still considered one of the most affordable places to live.
Yeah, and why is that? It's because just it's easy to drive around. The gasoline price is cheaper than California. Food prices cheaper. What is it about Las Vegas that keeps the prices or the comparable prices of living so low?
Well, I mean, like you said, there's a lot of land here, so they can just keep building out.
Oh, that's true.
And that has happened. And there's a lot of undeveloped land just in random places around Vegas, just in general. So there's just room to still grow and still live close to, your work or the Strip or whatever your goals are. In California, people a long time ago moved to Orange County when they couldn't afford to live in LA.
Right.
And, we have more land. Like, we haven't, come across that.
Yeah, I think that's true. I think the land acquisition cost in Vegas is still pretty cheap, especially because they keep pushing the city limits further and further north. That's what I've seen. Every time I go out there, I see a community I hadn't seen before, or a gentrification like in North Las Vegas really has been going on, I guess, for the last 3-4 years, maybe longer.
Yeah, they're doing a lot of gentrification downtown too. There's I saw on some thing I read that there's like a big apartment complex and that's going up in downtown Las Vegas, and there's a lot of gentrification happening around that area.
Now the flips, you've been involved with flipping houses yourself. What's that business like right now?
Flipping houses is always a business. It's always there. Because regardless of how many people do it, there's still houses that need to be redone, and that'll just always happen. Because even if a house was done 10 years ago, like the standards and these type of things, they change so frequently.
Now, are most of the houses there required to put solar in if they are built brand new? That's a thing in California. No?
I've never heard that.
Yeah, I hadn't heard it either. That's why I'm asking. I know that in California, if you build a new house, you have to put solar on the house, but it hasn't really happened. We usually have a guy named Zach come on the show and talk to us about solar energy in Las Vegas and whether it's a good idea for you or not. Do you notice that that's a trend, or is it just something that is sort of a pipe dream for the politicians?
I've never, I think maybe once, I've sold a house that had solar. I don't even remember if I did or not, but I think maybe once. No, it's not really common, actually.
Yeah.
They have a lot of different, I don't think it's as cheap out here as it is out there. I knew some guys that sold solar in California and they tried to do it here, and it didn't really take off because I don't know if it's the tax credits or really what the issue was, but they were not able to really make any money and they went back to California, so I just don't think that it's as popular out here.
Now, in Las Vegas, you work all over town, and just for the people who are looking for an agent out there?
Yes, all over.
Excellent. Could you give somebody who is listening to the show who needs a great agent a way to get a hold of you?
Yeah, my phone number is 512-923-3489.
Great. Rebecca, thanks very much for coming on the show, giving us an update of what's happening in Las Vegas, and we'll talk to you soon.
Okay, thanks, Jeff.
Thank you very much. That's Rebecca Fitzgerald from the Realty Firm, and I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. Our telephone number here at the studio, but write it down, ask the questions after the show, and we'll get right back to you with some great answers. And if I don't have an answer, I'm going to find somebody that does. We try to be informative. We try to bring you some information that you don't currently have, or maybe answer some questions. We have rates and programs and people who come to the show just to do that, because this is not a pitch or a sell or one of those type of shows. We're here to try to inform and educate, and that's really what it's all about. And obviously, if you have questions, you can call the phone number. You can email me, info@malibufunding.net. Our YouTube channel, Twitter, everything that has to do with anything in terms of communication nowadays, make it convenient on you to be able to ask us and seek our help and advice. And to that end, back with the show after a long hiatus is Wendy Van Wessel from Stearns Lending. And Wendy, thank you for coming back on the show. Appreciate it.
Oh, it's my pleasure, and good afternoon. It's good to be back.
And good afternoon, and it's good to be back for you too. Glad to have you on the show. We were just talking on air, off air about Fannie Mae and Freddie Mac and some of the things going on with them. What's your opinion as to what your research showed you?
When I was looking at Fannie and Freddie Mac, they were always selling separately. Remember those lovely mortgage-backed securities that kind of went a little haywire in 2007 and 2008?
Yes, I do.
And the government decided that they would step in and oversee this process.
Yep, that's called the FHFA or FAFH, one of those two.
Federal Housing Finance Agency.
Yeah, right, exactly. An acronym that nobody can remember what it means. Yep.
Exactly. So they wanted to step in, and they wanted to start to create the mortgage, instead of the mortgage-backed securities. See, Fannie Mae and Freddie Mac are the two different places that you can send the loans to the agencies, and then they pool and sell them. And they sell them in to-be-announced pools, and those seem to be very liquid, and liquidity is good for our borrowers because if it's more liquid, then they'll buy them and sell them more quickly. They'll take a lower rate, and the rates hopefully will end up being lower because of that. So when the government stepped in and tried to combine them, then they wanted to get those uniform, what are those called again? Another acronym going. So,
I don't know.
It's uniform mortgage-backed securities.
Okay.
Instead of mortgage-backed securities, they want it to be uniform mortgage-backed securities. So they want to have Fannie and Freddie in the same pool so they have a larger pool. Together, both of them together, this last spring, were $4.4 trillion in the market.
Yeah.
That's a lot of money we're talking about.
That is. And in terms of, most people don't really understand what Fannie and Freddie do. They buy loans from lenders who lend you the money. So if Malibu Funding lends you money, I've got to sell that loan to somebody. And if it's a qualified mortgage, I sell it to Fannie and Freddie Mac. That's how I get my mortgage money replenished so I can lend it out to somebody else. That's really the simple explanation for it, right?
Correct.
Okay.
That's exactly right. And then they from there they go into the Fannie and Freddie pools, or this one combined Fannie and Freddie that they want to create the uniform mortgage-backed securities.
Right. They want to do away with the individual companies doing it and pool their loans together. Now, why do they want to do that? Is it a super fund? Is it something that just because of the size of it, it's more attraction to investors who want to take out a larger chunk? I've always wondered what the difference is and why competition between the two wouldn't be better.
There's two things that held them apart when I was looking at things. So Fannie Mae had you had 55 days with which to sell your mortgage as the banker to them. And for Freddie Mac, they only had 45 days. And they also saw that Freddie Mac trended a little bit higher in that they were selling them. They were prepayment rate. Conditional prepayment rate was higher on the Freddie Mac side. You don't want that. You want them to be equal in the same playing field, because with a larger pool means that it's more attractive. You don't want it to split into the uniform mortgage-backed securities and just the mortgage-backed securities for Fannie and Freddie. The three pools would make it less attractive and they wouldn't be as willing to go as low when they bought these bonds, because they wouldn't be all pooled together. The name of the game is liquidity.
Right, and usually what they do is they'll pool a number of loans together. I don't know what the batch size, nor I don't know whether you have a tranche and you can buy a portion of it or you have to get in on the whole thing. But what I see when they sell the loans is that they'll take a number of loans in different rates. So they could have a 3.25%, a 3.5%, a 3.75%, a 4% with different types of programs, and they'll bundle all those together in order to sell the bonds. And the bonds are a yield that they make based on the amount of money that you're paying on the loans each and every month. Everybody knows that on a 30-year fixed loan, you're probably paying 20 years of interest. So there's certainly enough money there in order to give the investors an incentive to buy these loans.
Yes. When Fannie and Freddie are putting them into TBA, like to be determined pools, they seem to be the most liquid. And they were $150 billion this spring. They were second only to treasuries, to corporate bonds, and they dwarfed corporate bonds, municipal departments, and asset-backed securities. So this pool of loans is very close to treasuries, and it dwarfs all the other things. So we're talking about it being very important to keep our rates lower. If you're wondering what to do and why you want it to work that way, if you want it all to be the same, what scared me a little bit is that they have a conditional prepayment rule that they hope it's zero, because that's when they don't make as much money, when they put those loans into that pool and they're not getting that interest rate and the interest on it. And they were thinking about maybe putting in a possible monetary fines if they did a prepayment that was earlier than expected, because it makes them not as attractive. Doesn't that sound like the prepayment rule that we got rid of a long time ago?
You know, the prepayment rule, that's always been something, especially here in California, where California has been really adverse to doing anything like that by punishing the borrowers because they want to pay off their loan within, the first 90 days or the first 6 months because the rates went down. I mean, for years that was the way it was, is that you had to pay, 1 month or 2 month penalty? I forget what it was, but it wasn't insignificant. The problem with all of this stuff is that the borrower is the one who really has to pay at the end if they hold on to that loan for a long time and they're paying an exorbitant rate. So they got rid of that prepayment penalty so that wouldn't happen, i.e. you're at a 5% rate and the market takes a turn for the better, and now that rate that you're paying could be lowered by half a point, but it was a month ago that you got the loan. So you want to be able to take advantage of that without having these prepayment penalties. I don't know if that's true that they're going to do that or it's not true, but it's something I wouldn't be happy about, because the borrowers get punished.
They were just thinking about it because they want all things to be equal. They want Fannie and Freddie to be equal so that they can keep that uniform.
Yeah, right. Well,
mortgage-backed security and not have three different pools that are out there, because that'll just make it a lot weaker and make the rates not as low.
Tell us what's happening at Stearns. Give us an idea of some of the programs you guys are flush about and happy.
I think that it's not going to go back to what used to be a stated loan, which we used to call a liar's loan. I think though I see a lot more QM loans, meaning that if you have a self-employed business and you write off a lot to save yourself in taxes, you are usually messing yourself up when you wanted to get a loan.
Absolutely.
Well, now you can do it with your bank statements. They look at your bank deposits. They look at 12 months worth of bank statements, or 24 months worth of bank statements, or 12 months and 1 year's worth of, taxes, helping the borrowers to qualify for more. And those rates are still pretty darn good. And you don't have to, on the lender side, you don't have to worry about the 3% QM test either on those non-QM mortgages. That's the difference between the QM mortgage and the non-QM.
Now, what I also heard and read was that Fannie and Freddie were going to expand what QM is, i.e. lower FICO score, maybe a DTI that's a little bit different. Have you heard that?
Yes, but what I've seen lately, which was really unusual for me, is the cash out that Fannie and the VA loans are allowing is lessening in October.
Yep.
So instead of, you know that.
Yep, I do.
Go ahead.
No, I do. Go ahead. I was one. You're preaching to the choir.
Instead of 95%, it's 90, or instead of 85%, it's going to 80, depending on your loan to value, your FICO score, and your loan amount, whether it's high balance, your county high balance, or just the conforming $484,350.
Okay, so really appreciate you coming on the show once again. It's always a pleasure to talk business and as well as what's happening in the larger macro sense in the lending business, because it's changing once again. It always happens.
It is changing, but they're always looking out for the borrowers. I think that some of these rules are good. Some of them make our loans a little harder.
Yep.
But I love what you do in explaining things to everybody so that they know what to expect. I think that this is a value added, and I appreciate you doing it for all the borrowers out there.
Thanks, Wendy. Appreciate you coming on the show. Let's do it again soon.
Sure. Have a great day.
And you too. And that's Wendy Van Wessel from Stearns Lending. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. Our telephone number, NMLS number is 79620. That's the NMLS number for the company. Allows me some authority here on the program. Been in the business many years, real estate as well as mortgages. And wanted to say hi to KCAA, KMET, and K-Tahoe, our three great stations that we're currently on. We'd like to expand that a little bit further, but we'll have to get down the road towards the end of the year before we do that. If you'd like to contribute to the show, we'd love to hear from you. You can reach us via the telephone number. Our email address is info@malibufunding.net. My Twitter account is @Jeff6493. I have bartonblog.com and .net. We're trying to put those back together again. And, of course, we're on YouTube. If you go and my mortgage channel is called Jeff Barton, the Mortgage Voice, and you will see many, many, many of these shows. Whether they're today's show, last week's show, last year's show, they're all there, and we try to give informative bits of information to help you make your decisions about whether you're going to buy or whether you're going to sell real estate this year, whether you're going to get a low interest rate mortgage, whether you're going to get an adjustable rate mortgage, whether you need a hybrid type mortgage. There's a lot of new experimental ideas coming out of Congress. I don't know if they're going to happen. There are 5 ideas to reform Fannie Mae and Freddie Mac. Now, for those of you who haven't listened to the show before, we try to give an overall perspective of what's going on in the mortgage market. Certainly the rates are great, by the way, although they did have a tough week last week. The 30-year fixed rate currently is 3.875. Now, that's up almost 0.375 from last week or 2 weeks ago. I was off last week. We replayed the show. But 2 weeks ago, they were lower. Now, there's a reason for that, right? Obviously, we had the attacks in Saudi Arabia. We always have interesting and volatile situations happening in our own government, so it's never quite sure whether we're going to solve the trade war with China or whether we're going to expand the trade war with China. So the markets are always nervous and fluctuating greatly. The FHA and VA loan is 3.5%, still a great rate. The 15-year fixed, 3.375 to 3.5. And the ARM products, 3.25 to 3.75, depending. And what does it depend on? It depends on you, the borrower, the FICO score, the income, all the things that you're going to need to when you for your application, when you supply the loan officer, the company, the bank, whoever you go to get your mortgage. These are the kind of documents you're going to need in order to be able to get that loan. So that's why there's a fluctuation in the pricing. And it's also dependent on where you live. Obviously, if you're in the hurricane zone right now, it's going to be difficult to fund anything. Many of the counties down there have been declared disasters. Usually that means, let's say you're in an escrow down there, and you're in escrow here. Let's say it's fire season here in California, or the big earthquake hits. Usually what happens is the lender, the person giving you the money for the loan, whether it's a refinance, cash out refinance, a rate and term refinance, or a purchase, what happens, the lender suspends the loan until the appraisal company can go out and look at the property. Now, even if you're in a particular zone, i.e. a earthquake zone or a flood zone, or there's a particular weather event that's happened, and we've talked about weather events on this show a lot, just because it happens, as people say to me, you don't have seasons in California. I say, yeah, we got seasons. We got the earthquake season. We got the fire season. We certainly got monsoon season, right? Flood season, absolutely. Now, we may not have summer, winter, fall, and spring, but we certainly have our seasons. So if you're out there and you're wanting to get some answers to what we're talking about and trying to get a handle on it, the show does take us through some of the national aspects and how they affect us locally here in our rates. And long term, everybody wants to know what's happening right now, but long term, what's the health of the economy? Because let's face it, even if you got a 3.5% mortgage today, 3.25% mortgage today, if you lost your job, could you pay that mortgage? And that's really where we get our national or international perspective, is to try to forewarn and forearm you as to what's going on so that you can make the best informed decisions about what you want to do. Now, I know I live day to day too, right? And I want to get up in the morning and have my cup of coffee and drive to work and not really think too much. Why? Because I'm inundated like everybody else with what's going on in our national political scene. And I am so tired, and I mean tired, of people having opinions about whether this is right or whether that's wrong. I can't do it anymore. I have to focus on what I can do each and every day to make my company, the loans that we do for the consumers, make sense. For an example, I talked to a client today. He lives in rural Arizona. Now, rural Arizona, if anybody's been to Arizona, you know what I'm talking about. It's out in the middle of nowhere, between here and there. It could be up near Prescott. It could be, 30 miles outside of Scottsdale. But it can be in the middle of nowhere. He's got a beautiful house. He says the house is worth $800,000. He's moved from Indiana. He bought this house. I don't know how he did the original loan, but now he wants to take some money out of the property. Problem is, we can't get the darn thing appraised. Now, when you do any loan, you need an appraisal, unless you're in a select group of homes which has a waiver on appraisals. Now, there are some, so I can't say that blanketly that's true. But for this property, because it's in rural Arizona, and because it's worth, we need an appraisal. So the AMC, or the appraisal management company, which is what all lenders use in order to get loans. We can't talk to the appraisers personally anymore. That's called arm's length, and you can't do that. That was one of the problems in 2007, was that you could call up your buddy who was an appraiser and say, hey, you know what, we need an appraisal to come in at $350,000. And that's how the appraisal would come in, regardless of what the comp says. And that's one of the problems of what happened in 2007, 2008, 2009. So that doesn't happen anymore because there's a buffer between me and the appraisal company through these AMCs, the appraisal management companies. The appraisal management company that was approved by this lender to go out and do this appraisal couldn't find an appraiser to go out there. 13 turned the job down. Now, why did they turn the job down? Because it's in the middle of nowhere, there are no comps, and they have to drive 40 to 100 miles to do the appraiser. the appraisal. So what do? I have to get on the phone with the borrower and say, look, Mr. Borrower, you have an appraisal that's needed in order to do this loan. There is a company that will do it, not the AMC that we chose, but a different AMC, but they want to charge you $1,600 to drive out to your property. Now, and for these people, it's like 100 miles. And I said, if it was me, I wouldn't do it. The reason I wouldn't do it, because I'm not 100% sure that the lender is going to accept this appraisal, because the comparable property sales are 10 miles or more away. Now, everybody who knows anything about appraisals will say comparable properties in a city, let's say, or in let's say, in San Bernardino, you're going to want something within a quarter mile, half mile tops, and you want to have 3-4 appraisals. Well, in this rural property, because it's so remote, you might have 3 properties total, but they're between 10 and 20 miles away. So will the lender accept that? I don't know. And I advised the borrower, I said, look, if you want to go through with this, fine, but I am telling you, I'm not altogether sure that the lender is going to accept any appraisal because the comparables are so far away. And he asked me, what was the percentage of chance that the file would go through? I said, in all honesty, Mr. Borrower, 60-40. If you still want to do this, I just want to make you very well aware that the appraisal may not be accepted, and the appraisal itself may not come in at the number you need in order to take a cash out refi. So he's thinking about it right now, and he's going to get back to me this afternoon. There's a lot going on when we talk about appraisals, and that's a topic for another show, I guess. But in terms of what we're doing here today and some of the macro that we're dealing with, as well as the micro, the nitty-gritty of each and every loan, that's what we do on the show, and that's what we will do. We have some great guests and had some great guests today, and I really appreciate them all coming on the show and giving us their opinions of what's happening in their business, in the area that they work, and also for what's going to happen in the future. We are at the cusp of the last quarter of 2019. Thank you very much for listening to the show. I'm Jeff Barton, your voice in the mortgage industry, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.